A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a bold move that has sent shockwaves through global markets, President Donald Trump has threatened to impose a staggering 50% import tax on all goods brought into the United States from the European Union. This announcement comes amid ongoing trade negotiations that Trump claims are going nowhere. He took to Truth Social to express his frustrations with the EU, stating that it was formed primarily to take advantage of the US in trade. Trump's rhetoric paints a picture of a trade landscape fraught with obstacles, including powerful trade barriers, VAT taxes, ridiculous corporate penalties, and more. The president's comments come at a time when the US is facing a significant trade deficit with the EU, which he has labeled totally unacceptable. As a solution, he has proposed a straight 50% tariff on EU goods starting June 1, 2025, unless they are manufactured in the United States. In a separate but equally concerning post, Trump has also threatened to impose a 25% tariff on Apple products unless the company begins manufacturing iPhones domestically. He stated that he had previously informed Apple CEO Tim Cook of his expectations for US manufacturing, emphasizing that if the company does not comply, a hefty tariff will be imposed. This move raises questions about the future pricing of iPhones, which are already popular in the US market. The implications of Trump's threats are far-reaching. Following the announcements, American futures and global stock markets experienced a downturn, reflecting investor anxiety over potential increases in consumer costs. This situation is part of a larger narrative that began earlier this year when Trump announced massive import taxes on all goods entering the US. The initial wave of tariffs, particularly those targeting China, saw rates soar to an unprecedented 154%, sparking fears of a recession among analysts. Despite subsequent negotiations that saw some tariffs reduced to 10%, uncertainty remains as Trump continues to wield tariffs as a tool to compel foreign companies to manufacture within U.S. borders. The unpredictability of these trade policies has prompted investors to seek refuge in other markets, raising concerns about the U.S. dollar's status as the world's reserve currency. Adding to the economic turbulence, Moody's recently downgraded America's credit rating for the first time in nearly a century, citing a growing budget deficit and high interest rates as contributing factors. The agency's decision to lower the rating to AA1 reflects concerns about the government's lack of spending cuts and the long-term impact of Trump's tariffs on national growth. As the June deadline approaches for the proposed EU tariffs, European officials, including Poland's Trade Minister Michael Baranowski, have downplayed the seriousness of Trump's threats, indicating that there is still time for negotiations. However, the rhetoric from Trump suggests a willingness to escalate tensions, especially with a trading partner that has historically been an ally. The ongoing saga of tariffs and trade negotiations underscores the complexities of international trade in a rapidly changing geopolitical landscape. With the stakes higher than ever, both consumers and businesses are left to navigate the uncertain waters of Trump's trade policies, which continue to evolve and disrupt the global economy. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.